Good morning, traders, and welcome to this week's live session with me, Richard K. from Price Action and Income. If you attended one of these sessions before, I like to go over some of the major markets as well as some potential new trade ideas that I might be seeing. As always, guys, just take note that everything I'm showing you today reflect my own opinions and analysis and does not constitute any trading advice. As always, we have Nathan manning the chat box, so if you've got any questions that you might want to ask me regarding to the markets, you want me to have a look at some of your charts, then please feel free to drop a note or question there in the chat box and Nathan will relay that back to me. I normally go on for about half an hour and then we'll call it quits there. And again, guys, thanks very much for attending. If you are new to this channel, then please do not forget to subscribe, hit the like button. And if there's any comments that you might have, then drop that in the comment section below this video. Maybe even if you watch this after the actual recording, then we might circle back to questions you might have posted there. Alright guys, without further ado, this week I want to be looking again at some of the markets I looked at previously. I want to look at the dollar index, gold. We've had quite a few people asking me about Bitcoin, which I covered in short detail last week. I just want to look where prices is at the moment. Crude oil, which is for me very interesting, at a very interesting point at the moment where I think we might get a reversal. And we can have a look at the Euro US dollar, which I think I mentioned last week as well. So let's quickly have a look at the dollar index. Very important obvious market to follow if you are trading the currencies. The basket trades that obviously form the dollar index, like your forex majors, are obviously influenced, or you can judge by what happens by the dollar index, i.e. dollar index strengthens and those other currencies will weaken, vice versa. So previously we looked at the dollar index, and in my opinion, I think what we've been seeing here since the low in Jan this year is a correction. Now in the previous videos or live sessions, I also identified a little zone. Our price has reached that zone and we reversed a little bit lower. So I'm still viewing this as corrective. I actually do not think that we are done going up. I think we're correcting within the last sort of phases of a correction that can still move higher. I think we will eventually, most likely the dollar index could move below the January lows. I would say probably towards the end of this year, or maybe the beginning of next year. So I'm currently viewing this move lower. Let me just open that up a little bit. I'm viewing this as a very large A, B, incomplete C wave. And what I'm thinking about this move to the downside is what we've seen a 1, 2, a 3. We're correcting in a fourth wave and then likely going to get a fifth wave lower again. Obviously, the market would do what it wants to. It would not just follow what I'm saying. That's why I have to employ market geometry and also different entry conditions that I do follow to basically trigger me into trades. Very interesting here since we looked at the dollar index last week, is this pattern I'm still viewing as an A, B, C, potential an X, an extended A with a B moving lower now, and then another C wave to the upside. And how you would mark that is a W, X, and a potentially incomplete Y. Now what I'm seeing here is I think that we have an extended A wave that has just completed right in that box that I mentioned before, and we might be drawing down into a B wave with a C wave to follow. Now how high that C wave might go, you know, that really depends on by the time price does go high, if it does go high, I should put it that way. If I move this pitchfork that I've had on my chart previously to a shift pitchfork, you can see we've hit that upper median line perfectly and we're pulling down lower. So if we are on the right track and this is some sort of extended A wave of the second ABC, then we could be pulling back to the center median line here, which lies currently around about the 91.60, 91.70 sort of level. And potentially we could see support there. One would expect, though, if we do get a B wave, that it will be some sort of a zigzag or a combination of a zigzag. So this might still be the first wave lower, followed by up move and then a move lower and then go higher again. So this might be a very drawn out pattern that's still evolving. I do study patterns in great detail, so I really do think that although a lot of traders are saying that the dollar is probably going to weaken now, yes, they are right. I think it will weaken over the short term, but if this pattern does ring true, then I do still, like I said, I think we've only seen the first or the second A wave, with a B wave potentially lower, and then with a C wave to follow to the upside. Also something interesting here, if we run a fib extension from this low to that high and extend it to this low over here, this higher low, then price very, very nearly reached the 100% of this wave to the upside, which is almost a perfectly symmetrical range in time and price. Also very interesting, this first wave up to the upside took 60 bars, and this is set on a daily chart, so that would be 60 trading days or 84 calendar days. Now if you run that from this low to there by a couple of days, just extended the same sort of time, how can I say, time range that this wave took to complete, and also almost reached the 100% there. Obviously with these median lines, it's boxes that I've drawn in there. I sloped the pitchforks in different directions with the different settings. This is now on a shift. If you go to the original, and even if you wanted to use a modified pitchfork, all of those important lines or median lines crossed within that box, and we are now moving lower. Right, that's my opinion on dollar index. Levels to watch at the moment. Let me just drop in a horizontal line. Would be the center median line of that pitchfork, and around 91.82. If it's going to draw back to a fib level, we have the fib level down here from this low to the most recent high at 91.64. We might even make it to the 0.618. Depends on how strong this drop is. I still think we're busy with the first move lower of an A, possibly B and a C, or combination of a correction before we go higher. So I think that is what is happening on the dollar index for those guys that trade currencies, and I'm looking for support within that sort of area over there. I just want to save that work quickly. George, I'm going to get to you now. You want to update your proposed long entry on the AUD Japanese yen? No worries, George. I'll have a look at that for you now. Let me just quickly add the AUD Japanese yen. So it's towards the end of my watch list for you. All right, that's in now. Quickly look at gold. Gold, guys, I'll be dead honest with you, no clue what's going on here, which is perfectly fine. I'm not in gold at the moment. I would not be surprised if we're going to go down lower in gold, i.e. dollar index now moving lower, then we'll probably see strength in gold. That also paired with the issues in Afghanistan. You know, there's a lot of fundamental news that could also be pushing gold higher. I'm still of the opinion that in the bigger scheme of things that this was a third wave high. Now we either have an A, B, C that completed, went up, made a double bottom, and now we're going to new highs, but I really don't know. I don't think so, to be dead honest with you. I think we're going to continuously we're going to slide a little bit lower, probably towards the end of this year, October, November, before we see a stronger low form. Bitcoin. All right, one of you guys asked me last week about Bitcoin. Bigger schemes of things. This run up from this low in March 2020, I'm still viewing as a 1. There was a 2. This was potentially a third wave high. And then we had what I've been tracking with my members as well, a very big expanded flat, i.e. a C wave that ran in 1, 2, 3, 4, 5 waves. Now that being said, I'll also have a different count here. This might have been a third wave high. Now we're seeing an A B that very nearly reached the golden FIB retracement ratio at 0.618, and now price could maybe move lower again in a C wave. Even if this happens and we do break these lows, I'm still bullish Bitcoin over the long term. That being said, my preferred count is still that we could have seen now the first wave higher of a potential much larger move to the upside. But again, guys, don't take that as any trading advice. I do think that Bitcoin is due for a deeper correction. Now, where that's going to go, I've got this upward sloping standard pitchfork, which basically caught the prices or these moves to the upside pretty well. We had a retracement there and very nearly reached the 0.618, again touching the upper median line, and we now had a pullback to the center median line. So if it's going to go up higher from here, it might as well just do that. It has not reached the 0.618 yet. It's just slightly missed it. But also depends on which charting data you use, or from which, I might say, brokerage or exchange you're actually looking at. You know, these prices do, I'm looking at Bitstamp at the moment. These prices might differ very, very slightly. So I've had this year that I've done private analysis for a guy, and we've had a retracement now. But just be careful. If we do not go much higher and we break these previous lows, where we had a 1, 2, 3 lows now at the 46. Let me just get that on accurately. Around about the 46,300 level, then I think we can move lower, and that will probably confirm that a deeper correction is still underway and probably going to start kicking off with a bit more volatility. Crude oil. We have another question from Alfonso. Alfonso, I'll also get to your question in a short while. And here we have crude oil. I was actually going to hope that we can show you something here, and now price is moving already. There's a lot of talk on news about, and from a fundamental aspect, that and I'm just going to read something here for you, that, you know, there's obviously some worry about the Delta variant in the world and how that might impact demand. Also the recent Hurricane Ida, you know, a lot of these oil refineries had to close. There's also apparently a lot of oil tankers and sitting with full storage of crude oil at the moment, and then also just a slowdown, weak data out of the US, as well as a weak economic growth in China. All of these are supposedly bearish from fundamental aspect in crude oil. Now, if that is the case, then and we do see now a next leg to the downside, and I was hoping that this won't happen while I'm talking to you guys, but crude oil is moving lower. Previously I shown you this upward sloping channel. Price broke below it. Here it failed to stay below it, pulled back, broke below it, and now pulled back to it. So this could be what we call a kiss goodbye. If we are moving lower and these fundamental aspects do kick in, I think we clearly had an ABCW and an X and another ABCY to the downside here. If we're going to make new lows here, I think this is just one heck of a correction that could also take quite a while to materialize. And we're probably going to see much higher crude oil prices leading into next year. Whether this happens this year or next year, whatever the case might be, I'm just concerned about what's happening here. And the only correction that really fits into or comes to mind are if this wasn't the end of a correction over here on the 23rd of August, is a more complex X, Y, as we call it, XZ. So there's two double zigzags pretty much after each other. And if price does move lower from here, which is seemingly starting to do right now, then we could be reaching this lower median line, or wherever this median line might be, taking from that high to this low in July to the lower high on the 30th of July. Then I think price could test this low again, the recent lows, on the 24th of August, 23rd, 24th of August, and potentially reach the lower median line here. Now, whether we've done going up here, this is a very strong jump to the upside. I think it's very similar to what happened over here. So a bit of a similarity, I believe, happening over here, although I actually projected, let me just get rid of that. The length of this WX, the first one, could very well be this one here as well. Now this is a modified shift pitchfork. If we do not go down from here, we might see another retest into this area, and that will probably bring us to the upper median line if it's actually going to, you know, extend a similar distance that it did in range as this WX wave, assuming that this is a more complex pattern. And I would then say, if we do make another high, that probably going to retest this highs and reach the upper median line of this modified shift pitchfork, and again test this downward slope or upward sloping channel from the downside, i.e. another kiss goodbye. So there's been a very strong move to the upside, but the fundamental news are sort of tying in that we could be seeing lower prices in crude oil. Alright guys, Euro US dollar. So the Euro US dollar is moving higher, obviously, because the dollar index is moving lower. I'm still of the opinion that if the dollar index is eventually going to complete, let's say this ABC, that the euro is doing the opposite, obviously moving higher and then move lower again, and potentially also giving us an ABC. X extended ABC, another combo pattern which is, in my opinion, most likely not finished yet, which could still reach a 1.1600 to 1.1665 level. So that's my opinion of Euro US dollar. And then George, I'll answer your question quickly, but Alfonso, quickly while I have it on here. Sorry, George, your question was about the AUD Japanese yen. And there we have it. We had a reversal zone between the 77.45 to 78.50, and price reached the lower red warning line of this move to the downside. It's reached the lower red warning line of this upward sloping pitchfork on this bullish phase that we had over here. And very interesting, if you, and this is a funny way to do it, run a standard pitchfork using the three most prior or most prominent pivots prior to this jump to the upside. Then it just touched that upper red warning line. So we got three lines that crossed, not perfectly, which is just, you know, sometimes how market geometry works, but it basically crossed within that sort of section, and the AUD Japanese yen is now running higher. Okay, so where's it going? I think if you're not in this trade already, we also have what we call a beautiful bullish flank doji, i.e., and this is on a daily, a red candle to the downside, a doji formation followed by an immediate reversal to the upside. It's what I call a bullish flank doji. That signaled also from a candlestick pattern perspective that price was reversing. So if price is still respecting this downward sloping trend line, standard pitchfork, then the next target would probably be a break of this high, which would also coincide with this upper red warning line of this downward sloping pitchfork around 81.57, and perhaps even reach this low median line of that upward sloping pitchfork, where price basically found support at the low red warning line, which currently lies around the 82.29, 82.30 sort of level. Right, George, that's what I'm thinking about the AUD Japanese yen price reversed beautifully from that zone that we identified before. And then Alfonso, hey Richard, I have one question. Do you have experience using FIB channels on TradingView? Alfonso, I don't use FIB channels at all. I'm sure there is some great uses for that. So, I mean, I can quickly have a look at something like that for you. Where's the FIB channels? Here somewhere. FIB channel. Oh, goodness, let me just move this out. It's something I really don't use at all, to be dead honest with you, Alfonso. But I do know people that do. So I wouldn't even know if it's worth drawing it as using the same anchor points as a pitchfork, for example. But you see where it crossed the 1.618 on the FIB angle is basically sort of where this correction ended. Well, I believe it might be a correction, or this move or this bullish phase ended with the next either short-term bullish phase going to the upside or whatever the case might be. So I'm not that clued up using FIB channels. Then we have a question from KXD. Is futures the same as options trading, and is it too late to enter Citrix and MP trades? KXD, firstly, if you're going to be trading the Citrix or MP, you're going to be trading on the stock side of things. If you talk about futures, you're more talking about your commodities, your wheats, your crude oils, your metals. And futures obviously have different expiry months. That's why they are called futures. And options is a completely different ball game. I've been trading options. I still love trading options. It's just that many people, you know, find it too, I don't know, too difficult to understand. And it's got an extremely, how can I say, steep learning curve involved with options. When you go do internet searches on options and stuff, then quite often you'll find a lot of, I don't know, big heads in the industry telling you that it's extremely risky, etc., etc. In my opinion, it can be if you don't know what you're doing. I think you can really see your butt if you, sorry for saying that, if you don't know what you're doing with options. But you can trade options on futures, and you can trade options on stocks as well. But it also depends. Some stocks might have options on them, some of them might not. That being said, if you want to be trading, there's so many different strategies that you can create using options, depending on what outlook you might have. You know, if you want to obviously think the market's going to go up, you can buy a call, and you think the market's going to go down, you buy a put. That is to say, if those instruments you're looking at or markets you're looking at do have options available. But many people make a huge mistake when they do trade options is, for example, they just think they're going to use options for the leverage that it does offer, and let's say they think a market's going to go up and they want to buy a call. And that would be the right, obviously, option contract to purchase. But what they do not understand is that many traders don't factor in what the implied volatility of the options are for that contract month that you want to trade, and for which expiry, obviously, you want to trade into. And the implied volatility is one of those metrics that does influence the price of what options are priced at on your option chains. So if you have very high implied volatility, then your options are typically priced extremely high. And when you have very low volatility, your options are priced very, how can I say, very cheaply. So just quickly, if you understand what I meant by that, there's a lot of traders who just buy thinking it's going to go up, and then for some reason, price does go above their strike price, although they bought, but they didn't know the implied volatility was high, which meaning that they actually paid too much for those options. Now, somewhere along the line, as market rises, the IV or implied volatility drops, and you can almost sit with a very negative position, although you're right about direction, if you understand what I'm saying. if you guys are interested in options, then leave notes there in the comments. You know, it's a fantastic way to trade the markets, but like I said, there are so many strategies involved and so many metrics that you need to follow. But in my opinion, it's probably one of the safest ways to trade in the market. You can even correct trades that go against you and all those sort of things, granted if you have enough time before options expiry. But yeah, that's a complete different ball game. So guys, the futures, you get futures on options and futures on stocks, and you also obviously get binary options, which in my opinion is just a bunch of gambling. So stay away from that if I can give you any sort of advice, or even if I'm allowed to give you any sort of advice. But yeah, I don't think it's too late getting into MP or Citrix at all. Although we're just seeing the sideways move since we've entered, and this has been sort of an issue that I've experienced for the last couple of months. We get into positions, you see this long sideways ranges all of a sudden, which is obviously out of our control. We can't control that, and then eventually see a market move in your direction. Okay. Chayat asking, sir, what's your outlook on XAU-USD? We got 4 minutes left, guys, so I'm quickly just going to go over that again. My outlook now with the dollar index potentially moving low, and I'm just going to do this out of perspective of what the dollar index is doing, because I think I've got a better idea of what the dollar index is doing than gold, to be dead honest with you. The dollar index is dropping, but I'm thinking we're coming down in some sort of a B wave. It could take quite a while, maybe a month or so to materialize, so we can see up and down movements, which would potentially be bullish for gold. But like I said in the beginning of this of the session, is that it's just such messy price action. You know, we could very easily go up from here. Tensions, it's still the COVID thing is lingering. This potential talks about terrorism, stuff that happened in Afghanistan and all that sort of stuff. You know, I'm still viewing this as a third wave top, and I don't think we're done going down. But how are we going to get there? I think it's going to be messy. It's going to be up and down, up and down, up and down. So it's a market that I'm not currently in. So unfortunately, I can't offer you much more than that. But over the near term, the dollar index is dropping, so you probably see that that gold will probably move a bit higher. Okay. Are we looking for time? Guys, we've got 2 minutes left. I know Nathan needs to go to a doctor's appointment. So if there's any other questions, I do have a couple of minutes left. Minutes and a half left, and please let me know. If not, then I really do hope that you guys enjoyed today's session. Again, if you want me to analyze some of the markets you like following that I did not cover here, drop some comments there in the chat box or in the comment section below this video. Please hit the subscribe button, and you'll be alerted when we have the next session. Again, we're going to try to do this you know, diligently on every Wednesday around about the same time. And okay guys, I think I'll call it quits for there, so Nathan can go do his thing. And thanks very much for listening. Hope you all have a fantastic rest of your day. Keep safe out there, and I'll be back next week and see you then. All the best. Goodbye.